Clearly, Bitcoin price increased over time, so that could be adoption, right? Maybe an adoption-based valuation model, S-curve, for example. But then again, what drives that adoption? So for me, in this model, I did it a little bit different than the first model. I predicted the average value and I inputted the average value of each halving cycle. If you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption. If Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential.
Anonymous Bitcoin analyst Plan B is confident that Bitcoin is in the midst of a bull market and says a big move is coming. Predicting a major surge, he believes that rising investor activity and decreasing Bitcoin balances on exchanges are signaling a shift towards a huge price movement. Bitcoin's price has been steadily climbing in 2024, up 44% year to date, currently sitting just above $63,800. The well-known Bitcoin analyst behind the stock-to-flow model remains bullish after major events such as the approval of the spot Bitcoin ETFs and the historic price movements following the Bitcoin halving. He believes Bitcoin is on the verge of a significant breakout, comparing the current $60,000 price range to Bitcoin's consolidation at $10,000 in 2020, right before a massive bull run. According to Plan B, Bitcoin is now in the phase of the market cycle, which precedes explosive price movements. He predicts that Bitcoin's price could double by the end of the year. Plan B expects the coming months to be critical for those watching Bitcoin closely, as price pumps combined with sharp corrections will bring massive gains heading into 2025. As institutional adoption grows, we can expect even higher highs. As Plan B points out, we're even closer to a six-figure price target. Be sure to check out the latest daily crypto newsletter by our friends over at Jamie Tree Finance for all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. Let's get right into the latest interview with Plan B, and don't forget to like and subscribe if you enjoy the content we do here.
As an input in a very simple, linear, univariate regression model. It's very rough. It predicted 55K Bitcoin at the time when, as you said, Bitcoin was below 4K. And well, yeah, that was a very nice correlation. It's the correlation that's shown in the graph that you show. And well, a lot of people dismissed it right away because 55K sounded absurd at the time. But some other people loved it, and especially its fundamental nature. And well, a lot of discussion happened since. There's a lot of misunderstanding about the model. Apart from very real discussions and critique that is very valuable, there's indeed this misunderstanding, and the wide prediction bands, the very rough estimates are one of those misunderstandings. Yeah, one thing I want to point out beforehand is that Bitcoin has an implied volatility or realized volatility, historic volatility of around 80%, which is very, very high. It's probably one of the most volatile assets on Earth. So, yeah, it seemed appropriate to refit it to see either, if the prediction was okay, still within the bands, and if the formula would change. So, first thing is and it's shown in the yellow line there. I refitted the model with 5 years of new data. So that's 60 months, and what we can see, and is that the average value over the last halving period of Bitcoin was $34,000. And that's below the $55,000 that the model estimated, but still very close from a modeling point of view. And especially if you keep in mind that the model was made and the prediction was made in 2019 when Bitcoin was below 4,000, that straight line, the value and the formula, they haven't changed a lot. The parameters are still the same. The results are still the same. It predicts now 50K instead of 55K. It predicts 500K for the current halving cycle, and 4 million for the cycle after 2028 halving. But I think that's one of the misunderstandings, the wide prediction bands. On the other hand, there's also the fact that in this model, I did a little bit different than the first model. I predicted the average value and I inputted the average value of each halving cycle. So if the result in the next halving period is anywhere near the result that we got last time, so for example, if the price is not 500K that the model predicts, but 300K, I would be more than happy. So one standard deviation is roughly 2x the model value and divided by 2 the model value. So for this halving cycle, it would be the point prediction is 500K, and one standard deviation band is 250K to 1 million. And the 2 standard deviation band would be 3x and divided by 3. So those are the bands, and that's for the average about the period. So if we look back in 2028 and the average is, let's say, below 250K, that's out of the one standard deviation band, but it would be still okay from a 2 standard deviation point of view. But I would be a bit surprised by that.
Just yesterday, Plan B posted his latest predictions and what he expects Bitcoin's price movement to be based on market conditions. Next month, he sees Bitcoin hitting the $70,000 mark, as we've seen historically October's price pumps. November, he sees Bitcoin hitting $100,000 right after the election. Then in December, a massive ETF inflow will bring BTC to $150,000. From January through July, he predicts that we'll see a chain of events that will bring its price from $200,000, climbing all the way through 2025, hitting $500,000, and even a scenario where Bitcoin hits $1 million by the end of next year.
I think that's one of the big questions for this halving cycle and the years to come. Will there be diminishing returns or not? Because that would invalidate a lot of models and validate a whole set of other models. And that's the big question that every investor should answer for himself. I do not believe in diminishing returns. And I've been very clear about it. I do not believe in diminishing returns for the exact reason you're talking about, that the S-curve, if you look at the S-curve, we don't know where we are exactly. If we're at 1%, 2%, 10%, I don't think we're even at 10%. But if you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption, and then it levels off. And so it must follow that if Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential. So no diminishing returns until about 50% of adoption. And I really believe that. I also believe that I can understand why people see the diminishing returns. Of course, if you look at the data, you see it. Especially the last cycle was very off. But I think it's an outlier. Actually, if you look at no matter what model you take, the addresses, models based on number of addresses, model based on stock to flow, model based on time, it doesn't matter. You'll see three big outlier years. That's 2013, 2017, and 2022. So the big all-time highs of 2013 and 2017, of course, but also 2022. And that was too low. And so that, in my view, causes the data to look diminishing, where in fact we'll see exponential growth. But I'm not sure, and it will be, that's very interesting to see next couple of years. Maybe we could go back a little bit to the chart before this one, because I love that chart. It shows so many things. It shows that indeed most of the rise is just after the halving, and then it sort of flattens out. It's stable for 3 more years, and that happened 4 times now. I don't know if that's a pattern or random, but 4 times it's quite a structure. And then it shows the diminishing returns. So the diminishing returns guys would expect that green line to be below the brown line, somewhere between 100 and 200,000, maybe crashing below 100,000 even in the bear market. And if we just track this line, we'll know what there is. And the third thing you can see is that this wide prediction band between it is shown in this graph. It's the upper line, the yellow line, and the lower line, the brown line. That's about as wide as the prediction band can be. So you can almost see the 250K, 1 million prediction band of stock to flow that I just mentioned. So that will be very interesting. Going to that other chart after this. So basically, here I try to dumb down stock to flow to its core, because there were so many misunderstandings, because it was too difficult for some, too much models, too much statistics, too much mathematics, and it was pigeonholed by others into deep econometric discussions about autocorrelation and co-integration, which is nice, but it distracts from the core. And the core, in my point of view, or my hypothesis, I should say, is that the halving increases scarcity, and that scarcity is valued by investors either directly or indirectly. So they invest directly in Bitcoin because it's scarce, or they indirectly feel that scarcity because there's no supply and there's no market. You can't get them. So the core is the halving. And if you thus make a very simple stock to flow trading rule that says buy Bitcoin 6 months before the halving, and the halving is every 210,000 blocks. That's what you see on the x-axis there. So every 210,000 blocks, there's a halving. That's every 4 years. If you buy Bitcoin every 6 months before the halving and then sell it 18 months after the halving, the 2 years around the halving, you would outperform buy and hold Bitcoin. And buy and hold Bitcoin is that blue line. That's just the Bitcoin price. If you apply this rule, you get the green line. So you'll end up significantly higher than the buy and hold. And even more important, if you do the inverse, if you would buy Bitcoin 18 months after the halving and sell it 6 months before the halving, so you would hold it only the 2 years in between halvings, you would end up with the red line. You would decrease your value over time. And that, I think, is not random.
Yesterday, we also saw the head of BlackRock's digital assets seeing Bitcoin as risk-off, as more institutional investors are adopting crypto as an emerging global money alternative. Even though Bitcoin has been highly correlated as of late with the price moves of US equities, the BlackRock Incorporated head of digital assets says it's inaccurate to call the cryptocurrency a risk-on asset. He said when we think about Bitcoin, we think about it primarily as an emerging global monetary alternative. It's a scarce, global, decentralized, non-sovereign asset, and it's an asset that's not country-specific and has no counterparty risk. BlackRock runs exchange-traded funds, investing in Bitcoin and Ether. But while many investors view Bitcoin as digital gold, something that holds value at times of stress, the narrative for Ether among many institutional clients is a little less clear. Bitcoin is up 49% so far this year, and Ether has appreciated 15%, largely thanks to the approval of ETFs holding both tokens earlier this year. Bitcoin maximalist and MicroStrategy co-founder Michael Saylor supported the recent statement made by BlackRock about Bitcoin that made ripples across the cryptocurrency community yesterday. Saylor echoed the sentiment of retail investors getting into Bitcoin with its high volatility and the prospect of its further use in the future. This is one of his several bullish statements on the world's flagship cryptocurrency. He believes Bitcoin is becoming particularly popular amid growing concerns about extensive money printing, fiat currency debasement, and escalating fiscal and sustainability challenges, not only in the United States, but in other countries as well. Among the key Bitcoin price drivers have been the fourth Bitcoin halving and the approval of the spot Bitcoin ETFs granted by the Securities and Exchange Commission. Last week, BlackRock also gained the approval of its Bitcoin options from the SEC, a milestone largely celebrated by the cryptocurrency community. Plan B's prediction remains bullish, as he believes that by April of 2025, the US could start constructing a strategic Bitcoin reserve. This could easily push Bitcoin to $400,000. Within the next 5 months, there's likely going to be a worldwide race among countries to accumulate Bitcoin, excluding the European Union, which he says will push the price to $500,000. Another factor in this case is the incorporation of artificial intelligence in the use of Bitcoin in financial markets. According to his prediction, the price of Bitcoin is expected to surge to $600,000 by June of 2025 through the use of AI systems to regulate conventional financial markets using Bitcoin. By the end of 2025, the FOMO effect among investors is expected to take Bitcoin to its highest price of $1 million. However, this rapid growth is not expected to be sustained in the future. A distribution phase in 2026 could again take Bitcoin to $500,000, and a bear market in 2027, with Bitcoin's price going as low as $200,000. What do you think about Plan B's prediction for Bitcoin? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.